Welcome back to Trading IQ, where we will learn the unlimited nature of the stock market. This is Shourabh Bhattacharjee. In today's video, I'm going to analyze two stocks and share my perspectives on why I'm looking at these two stocks closely, and both of them might be a very near-term buy. Maybe I could get an opportunity to buy next week based on how the structure plays out. So if you're watching this for the first time, I would request you to please go watch this video on the I button, where I have shared how I use Weinstein stage analysis to determine which stage a stock or a sector is currently at, and then based on which I decide on different other factors on which stock that is a potential buy. So my trading methodology is very simple. I look for best performing sectors which are currently outperforming the overall market, that is Nifty 50, and from that sector I'll look for some stocks which are in stage 1 base, and then it is looking to break out of stage 1 base with significant volume, and then only I'll consider buying them. So I will first look for those probable sectors and look for some stocks within those sectors which are in sort of stage 4 or creating stage 1 base or in a consolidation mode, and looking to break out of a certain level, right? Certain resistance level. So it has to be in a consolidation mode for it to be in my watch list. And I will look at them closely, and it might take few months, 1 year, 2 years. How does it matter? If I have a list of 100 stocks which are in stage 1 and those are from outperforming sectors, because see, not all the time all the sectors will perform, right? So you gotta be very picky or choosy when it comes to choosing a sector. You'll have to look at the trends, you'll have to look at the technical chart, right? I'm not here to talk about fundamental analysis. I only do technical analysis, and technical charts speaks a lot. So in my next video, I'm going to bring in Mark Douglas's trading psychology, and you'll get to learn a lot of new perspectives on why technical analysis is something that everyone should use, and everyone uses it for their own trading strategy, but they have to look at it more seriously because it tells you the current picture, wherein the fundamental analysis will not give you the exact picture, because that does not count what a trader would do, what a trader's psychology is. You cannot get to understand by doing fundamental analysis of a company. You cannot understand trader psychology, trading psychology of other traders, of other investors. But a technical chart gives you those by showing patterns. So anyways, that's a discussion for another video. So in today's video, I'm going to share two stocks with you that I'm looking at very keenly, and that could be a very near-term buy, maybe next week, based on how the structure plays out. So without further ado, let's jump into my screen and let me show you those two stocks. And by the way, those two stocks are from banking sectors, because I'm looking at it very closely, and I already have a couple of bank stocks. One is Axis Bank, another is PNB Bank. Both of them are performing well. You can watch those videos. I'll paste the link on the I button. I have created both videos separately, so you can check all my trades from this playlist, My Trades. You can look at different sectors that I had invested in and different stocks, so you can get to know my trading style, my trading strategy, and my mindset on how am I looking at those stocks. So let's jump into my screen and let's do some analysis on those stocks which I'm looking at very closely, and those could be a near-term buy. So the two stocks that I'm looking at are RBL Bank and Indusind Bank. Now RBL Bank is in a very good consolidation stage right now, and it looks beautiful. These are the stocks that I keep in my watch list, and I keep a very close eye and why, I'm going to share that into this video. So again, in any of the videos, if you're watching this for the first time, you'd get some fair idea about what my trading style is and what is the trading style. It's pretty simple, right? I do not have any complicated strategy on using different technical indicators. I just use chart on a weekly format that you can see here, and a 30-week moving average, which you can just add it by clicking on the indicator, searching moving average. Here it is added here, and then you can just simply select settings and inputs and just keep the length as 30, and that is 30-week moving average. It is as simple as that, right? And nothing else, and just add volume, and you will find it on every chart, right? So that's it. Now let's do some analysis on this chart. So I always look to add charts on my watch list which are sort of in stage 4 or after stage 4. It has created a base, or it is creating a base. So here, as you can see, from this level around 700, it has seen some huge decline, like a steep decline. From this to what? 100, almost 600% decline, right? So it's pretty devastating. And it was, and then we had the COVID-19 pandemic. So all factored in, and the price was around 100. And after all other sectors were sort of recovering, it also recovered. But unlike other sectors or other stocks, it did not recover that much. And then it again came back to its usual place, and it was sort of in downtrend. As you can see, it was in downtrend. It is still in downtrend, right? But why I'm looking at it, so this is clearly in downtrend, right? However, it is trying to create a base. Let's sort of analyze and use support and resistance. So this has been a support level. After it recovered from COVID-19 pandemic, it tried to get a support here a couple of times, and then here, and eventually it broke down that support range. Now whenever a support range is breached, then it will act as a resistance level. So this is the resistance level currently for RBL Bank, which is around 160 range, right? And it is trading at 150. Now it has created this sort of a base. So after the COVID-19, all things factored in, and the price went down to 100 and 102, right? From which it started recovering. It started to gain some momentum back. You can see from the volume itself, right? You can see a grouping of volume which pushed the price up. Now here it went further. It went to around 70, 78 in July-August time frame. So of course the bank's financial is poor, and you can look at subsequent balance sheet and fundamentals. You would find the reason, but I do not have to do that because I can see it from the chart itself. Like, the chart tells everything, and along with it, it tells you the psychology of traders. So from here, as you can see, it is trying to create a base. So for about 1, 2, 3, 4, 5, 6 weeks, it sort of consolidated around this range, 78. So we could call this a base. So you can call this whole thing as stage 4 decline. From here to here, from 700 to 78, we could call this a stage 4 decline. Now from here, it is sort of creating a base. And you see it broke out of this moving average here. Just look at this volume candle. 381 million volume when it broke out of that moving average, 30-week moving average. And you see it did not see that sort of volume except on this week, when of course it was recovering. Like it was a trend around this time, but here it is a sector specific, because the banking sector, the bank Nifty went up to all-time high, and it is at a very good stage right now. you can check my Bank Nifty analysis on my channel's playlist. Now this volume is pretty significant because it is breaking out of this 30-week moving average. Now at the same time, just look at the moving average. It is not anymore declining and it is sort of bending upwards. From here on, it has this upward momentum. It's a lagging indicator, so you would not get it. I mean, you moving in the moving average will not tell you that it's a buy, but it will give you sort of an idea of where it is right now. So it is bending upwards. That means it is sort of creating a base, and we could call this a base around this area. Now, the ceiling of this base is of course this 160 range, because it acted as support around this area. Now it is acting as a resistance level, because you see after this breakout, it sort of tried to break out of this level but could not, and then came down to this level, and then it is sort of peaking at that level. Now, when will I buy? If it breaks out of this resistance level with significant volume such as this candle or something similar to this candle, right? 100 million, 200 million volume, then only I will buy. Otherwise, I will pass. But then it's a probable prospect, and I'm looking at it very closely because the price is 151 and the range that I'm looking at is 160. So it is the price action. I'm looking at the price action very closely, and based on how it plays out, then only I will decide. So if it just breaks out without significant volume, no, I'll not buy, because volume has to be volume is a major part of whatever decision that I make in the stock market, because as per Weinstein stage analysis, you can only buy if there is a huge breakout and with significant volume. Volume plays a crucial role. Let's see Indusind Bank. It's sort of in the similar range. I will show it to you. So here you see the similar sort of pattern. So here it all things factored in, it went down to 304 from 2000 after the COVID-19 pandemic, and then it started recovering, and then it went back up and it did well, like the banking sector. Now, as similar to the banking sector, if let's open up bank sector, Bank Nifty. You see, Bank Nifty had this range. I have done this analysis in the past, the recent past. You can check it. Now, Bank Nifty had this stage 3 sort of top above the level that it saw before the COVID-19 pandemic, right? However, Indusind Bank, just compare it with the sector. Indusind Bank had this sort of a range, or you could say this sort of a range, and it is not yet reached that level, so it is underperforming till date. So we can say on another aspect or another perspective would be it is still undervalued, because the banking sector is trading above its all-time high before the COVID-19 pandemic. Whatever level that it had, it was trading above that level, but Indusind Bank has been trading below that level for a very long time. So we could call this a stage 1 base, because you see there's a trading range here. Here it tried to break out of this level 1245, it could not, it came back to this level, and here it acted as support many times, here, and it again came back to that level, but it could not, and then it is sort of trading here and there, right? And all along the volume, you see the volume, when it was recovering from the COVID-19 pandemic, it had heaps of volumes, right? Now, when it is in the trading range, the volume died down, and that means volatility is pretty low. It has that dried up. These are the stages that you have to look at these stocks, because if there is a breakout from this level with significant volumes, such as these candles, these volume candles. So the average volume around for the stocks is let's see, 200 million, 260, 250. So if it breaks above this level with say 150 to 200 million, because currently the volume is pretty average, because 19 million, 20 million, 6 million, right? Now if you suddenly see a spike around here, when I don't know, it is yet to be seen, it is yet to be unfolded. That's why it is in my watch list and not in my portfolio. So if it breaks out of this level 1243 or 1250 psychological number with significant volume, then I'm all in, right? Of course, not all in, but some portion of my portfolio will be invested into this stock, right? Based on how the structure plays out. So this is how you got to plan your whole thing. So my goal of sharing my watch list is, of course, it is very important because you have to have these type of stocks in your watch list, like a number of them in the watch list, for you to be able to figure out which are the ones that you would be investing in based on how the structure plays out and based on how the sector is playing out currently, right? So you have to backtrace them with sector. Let's suppose you have a list of 100 stocks which are in stage 1 and sort of in that consolidation mode, and if it is breaking out of that trading range with significant volume, that's a probable buy. But then you have to look at the sectors. If it is from a sector that is outperforming the overall market, that is Nifty 50, then only you will choose that stock. If it is not outperforming the overall market, if it is underperforming the overall market, let's suppose currently Nifty IT is underperforming the overall market, and if you see some stocks within IT sectors which are breaking out of stage 1 to stage 2 with significant volume, like a similar pattern, you should be cautious because the overall sector is not performing. So the sector has huge influence on the stocks, and overall market has huge influence on the sector. So if a sector is outperforming the overall market, that is an ideal place to be in. And then from there, if you see a stock which is breaking out of stage 1 to stage 2 with significant volume, that's yours. You have to go and execute trades without any hesitation and any fear. I hope you like this video, and if you do, please like my video, subscribe to my channel, and subsequently I'm going to bring in another playlist on Mark Douglas's trading psychology, and I'm working on it, and it's a pretty moving subject because I have learned so many things from Mark, and he's no more with us, and I'm so grateful for whatever knowledge that I could gather from his book, The Trading in the Zone and The Disciplined Trader. And I'm going to bring you my perspective on that playlist. So please keep a tab on my channel and subscribe to it, and I'll see you guys on my next video. Thank you and have a great day.